Hi everyone, this is another employment update following the government's release of the second Treasury direction to HMRC, which will instruct them on how to interpret and apply the rules of the coronavirus job retention scheme. There's a few important changes to note, and I will summarise these in this video. The first is a simple change or clarification in relation to work that's permitted to be undertaken by a director. This confirms that directors are able to make a CJRS claim in respect of their company and make payments of salary or wages of an employee without bringing their furlough leave to an end. So just clarification on the duties which a director can undertake while still remaining on furlough themselves. With regard to the ceasing of work, there was some concern in the previous direction that an agreement had to be reached in writing between an employer and employee and possibly signed as well as evidence of that agreement. The requirement now is for an agreement to be made in writing or confirmed in writing by the employer and retained until at least 30th of June 2025. So that can expressly or impliedly amend the contract of employment, and that to me makes it clear that we do not need absolutely a signature on a document from an employee agreeing that they be furloughed. In relation to training, the training clause has been expanded. Again, I think just to provide clarity on exactly what an employee can do whilst on furlough leave. They can undertake training which improves the employee's effectiveness in the employer's business or the performance of the employer's business, as long as that training does not directly contribute to providing a service, generating income or profit, or being involved in the production of goods or supply of services. Finally, and probably the most important aspect of the direction which has changed is in relation to calculating pay. Now, the previous direction required an employer to take into account only regular wages or salary and confirm that any payment which is conditional on any matter is not regular salary and wages and should therefore be excluded. Now, the problem with that previous wording is that this arguably excluded overtime, bonus and commission, which are very frequent payments that are made by many employers. Those payments arguably did not count as regular salary or wages because such payments are conditional on factors such as the employee's performance, their sales figures, their contribution to the business, or in the case of overtime, conditional upon them working additional hours. So this concept of being conditional on any matter has really caused some problem in understanding what we can allow in a claim. The position appears to have been made much clearer in the current version of the guidance, and in simple terms, overtime, bonus and commission can now be included where there is a legally enforceable agreement, understanding, scheme, transaction or series of transactions, even where there is an element of discretion on the employer's part. So to me, that says if we have a contract that can require overtime to be undertaken, if we have a bonus scheme or commission scheme, or if there are a series of transactions over time which make it clear that there is some understanding on paying bonus or commission, even if there is an element of discretion for the employer, then those payments can be included going forwards. Hopefully that's provided some further clarity, and thanks for watching.